Hello and welcome to the week ahead for equities. So this coming week is going to be a big week as far as US tech, big tech earnings are concerned. So we've already had this week Tesla and Alphabet. Next week we've got more of the Magnificent Seven updating the market. So including Microsoft on Wednesday after the close, as well as Meta after the close on Wednesday. Then on Thursday we've got Apple and also Amazon after the close. So let's just kick off with Microsoft. This is the chart that I've got up here. As far as Microsoft is concerned, big focus is going to be on AI. Obviously, this has been a winner as far as the AI trend is concerned. And I mean, we are looking at the share price trading up around record highs. So we're still going to see, or investors are still going to want to see that the numbers are supporting these lofty valuations that we have for Microsoft. Focus in fiscal Q4 will be very much on the Azure cloud computing business, which is a main driver of revenue. So last quarter, the Microsoft posted 35, or Microsoft Azure business posted revenue growth of 35% year on year. That was ahead of the 31% growth that was expected. This year, Q4, we're expecting to see Azure growth of 34 to 35%. So the market's going to be watching very closely those numbers to see whether they live up to expectations. Now, this is the chart that we're watching here, rising in trading in a rising channel. That's following on from the release of those numbers back at the end of April. Seen a really strong gains across the quarter. Obviously, we've seen the recovery as well amid the trade sort of tariff concerns easing. But just looking at where we are technically, the RSI has been massively, consistently and persistently oversold. We are just seeing that come out of oversold territory. We're still remaining within that rising channel. So, I mean, the big number here is going to be the 515, 514. That's where we've got the record high right now, trading very close to that level. So if we can get some solid numbers, particularly the Azure revenue growth, we see that rising above that 515 level, then that is going to help the stock take it to fresh record highs. Another one we're going to be watching out for, reporting also on Wednesday after the close, is Meta. Very much, again, focused on the AI. This is an interesting one because of the big tech. It's not actually trading in overbought territory. We are near record highs, but we're not in overbought territory. We've seen momentum slow a little bit, which has actually taken the share price just off those record highs that we've been watching. Now, again, the share price is trading up 22% year to date. We've had a really interesting ride here. Obviously, there was that all-time high that was now the February high. And then we saw a deep sell-off amid those concerns over Trump trade tariffs. And now we are seeing the share price recover back up to that record high that we saw at 747, just come off that slightly. But as far as expectations are concerned, revenue is expected to come in, or they guided, in fact, for revenue to come in between 42.5 billion to 45.5 billion US dollars. That's sort of pointing to an 8.8% to a 16.5% growth. Actually, analysts' consensus estimates are for revenue to come in at 45.8 billion. So that's going to be around a 14.5% growth. Focus, as I said, on AI development and also CapEx spending. We saw strong Q1 numbers and CapEx spending could be between 64 to 72 billion. So a lot of growth there, but Meta does seem to be particularly positioning itself well within the AI trend. And so there's going to be a lot of focus on what management have to say about the outlook there as well. Numbers to be what we've fallen away from that record high of 747. We came down to a low of just over, it's 690. Recovery is testing that 20 SMA as we speak. We're going to need to really see a close above that in order to bring the the 740 and 747 highs back into focus. Oh, just bear with me. Let me pull the RSI. Oh dear, where is it? There we go, back down. So that's what we're going to be watching out for. If we can get a move above there, we're still closing below there as we speak, and that's going to help to push on to fresh potential all-time highs. Just on the downside, you've got that support there at the 690 level, which is also the 50 SMA, and then below there 680. If we're going to break below there, that's going to potentially signal a deeper sell-off towards the 200 SMA level. And then just finally, we'll also be looking at Apple. Now, Apple has underperformed its sector peers. It is in the Magnificent Seven, but it has not seen the same sort of recovery. And that's because it's almost been tweeted sort of a bit more like Tesla as a potential consumer stock rather than a pure tech play. More recently, obviously that wasn't the case back in the day when they invented the iPhone, but that was now many years ago. So we're sort of lacking that innovation that potentially could help Apple return as a pure tech play. Obviously, we've been hit by concerns over iPhone sales. I mean, you know, it's underperforming the share. The share price is underperforming, and that's for quite a few reasons. We've obviously had tariff pressures. AI developments not been as encouraging as the market wanted them to be. iPhone performance, that's also going to be a big focus, as well as the service growth. Service sector growth within Apple businesses is actually a plus point. But as far as tariffs are concerned, let's just not forget that back in May, Trump threatened 25% tariffs on Apple products that were not made in the US. Now, that includes India. You know, we know that Apple is moving away, sort of the manufacturing away from China for products to the US. And we're looking to move to India, but Trump has said it needs to be made. These figures, iPhones and products need to be made in the US, which could bring the iPhone up to a charge of $3,500 retail price, which is obviously seems a little bit too much. I don't know how many people are going to be willing to pay that for an iPhone. So, you know, there are concerns as far as tariffs are concerned, what those additional costs are going to be. iPhone performance, we're expecting to see 48 billion in sales. That's up from 46.84 billion in the second quarter. As far as Mac is concerned, expecting to see growth slow slightly in sales there, just up 5% compared to up 7% in the previous quarter. But the service growth, as I said, an area of strength, that was up 12% in the previous quarter. Expected to see the growth continue up to 27.5 billion, and that's up from 26.6 billion in the previous quarter. As I said, AI developments and commentary surrounding AI developments will also be in focus. Any Siri enhancements, ChatGPT, that's going to be potentially something that investors are going to want to see in order to see a solid recovery in the share price. Also, guidance for the coming quarter and any AI-driven upgrade cycles will be watched closely. Now, this is the share price. We have recovered from those April lows, but not in the same way that the broader market has or other Magnificent Seven stocks. We're sort of really struggling here around the $216 level, trading in an upward triangle. So potentially, if there is encouraging news as far as the earnings are concerned, we could see a break above that level. That's going to bring in this resistance area here where we've got the 200 SMA at 222 and also the falling trend line at around the 220 level. So a little bit of resistance there. If we can get above that, then the outlook for the share price is significantly improved, potentially bringing in sort of, you know, moves towards the 250 level and towards the 259 level. On the downside, disappointing numbers. You got the 20 SMA and the rising trend line support there in at 210. Below that, you got the 50 SMA at 205 and then the 200 level there. Deeper sell-off potentially if we get a breakdown below there towards the 170 level, which is the low we saw back in April. So I hope you've liked everything that you've seen. And if you have, then please do give this video a like. And for more videos like this, please do subscribe.